Good evening. I'm Bob Baldacci, and welcome to Baldacci on Business. Tonight we're going to focus on raising money for your business. The first two shows, and again you can view those online at ctn5.org, focused on developing a business plan. And the second show dealt with legal and tax issues in creating and forming your own company. So we're assuming that you've taken those steps, that you've done a detailed business plan, and that you formed a company in consultation with your accountant and your attorney. So tonight we're going to talk about raising money for your business to help launch it. And I'm very, very pleased to have with us tonight three guests who represent three different sectors in this business of raising money. Chris Howard, who is chair of the business practice group and partner at Pierce Atwood, which is a law firm that I'm very closely associated with. Chris, welcome tonight.
Thank you.
Sandra Stone, who is the newly elected chair of the Maine Angels. And the Maine Angels, Sandra will explain what they do, and I happen to be a member of the Maine Angels. And it's really a group focused on early stage companies. So Sandra, welcome.
Thank you.
And Sandra is also an investor in her own right. And to my left is Bob Bruce. Bob is CEO of Zylo Media and an entrepreneur, and has a lot of experience in dealing with startup companies and trying to take companies to the level of actually making money. So Bob, thank you for being here as well.
Thank you.
So Chris, we only have a half an hour, so we're going to try to cover as much as we can in the short time allocated. Give us just a brief background of you and your work, and I'm going to ask Sandra to do the same, and Bob, and then we're going to talk about the various steps in raising money for your business. But Chris?
Sure. I'm an attorney here in town with Pierce Atwood, a large law firm in town. I've practiced since the early 1980s. Yeah. So that's about 30 years now, I'm embarrassed to say.
You don't look that
Thank you very much. I was hoping you'd say that.
No.
So in any event, and over that time, I've essentially been involved in one form of practice, which is general corporate practice. Spent a lot of time helping people raise money. Spent a lot of time in the capital markets, from large to small. And that's, one of the interesting things about Maine is it's a diverse economy, but it's a fairly thin economy, so you're working with businesses from startup and emerging businesses all the way through to very large businesses. I took 6 years off from practice in the mid-90s and worked with American Skiing Company. Yeah. From the point in time they really started their roll-up of resorts straight through the IPO, helped take the company public, and then exited when we brought in some private equity around the year 2000, 2001. Mm-hmm. Since then, I've been back in practice with Pierce Atwood, running the business group and doing mergers and acquisitions work and capital raising at all levels of the capital structure, from early stage right through mature businesses, right through succession planning and moving on to the next generation. So maybe that's a later show, actually.
That might well be, that's right.
So exactly. In any event, that's essentially my background.
Well, thank you, Chris. And if we have time, I'd like, Chris, you to talk a little bit about the Catalyst program at Pierce Atwood, which...
Yeah, I'd love to do that.
Which would be tailor-made for startup companies.
Absolutely.
Sandra, a little bit of your background. I do know that Sandra happens to be the tennis coach for Falmouth High School, and you've won 6 state
Six out of the last 9 Class B state championships. So, I have some great tennis players.
Great. Sandra?
But in my day life, I actually work with entrepreneurs and innovation. I come from a micro-enterprise background, having worked at the Maine Center for Entrepreneurial Development. Yeah. And I am now working mostly with entrepreneurs in a mentoring and coaching, setting them up with linkages into resources. Yeah. I'm the newly elected chair of Maine Angels, as you referenced. Yep. And that is a group of about 48 individuals who are accredited investors that look at early stage investments with entrepreneurs and companies that are interesting differentiated product in a growing market that have the right deal terms with an exit strategy that would make it a good investment for them.
Good. And it's a pleasure to have you here, and hopefully we'll have time to talk a little bit about what you look for in an entrepreneur as an investor.
Okay.
And speaking of entrepreneurs, we have one to my left. Bob, a little bit of your background.
Well, since getting out of business school over 20 years ago, I've been a kind of a hardcore early stage guy here in Maine. Have worked at times as a consultant, but pretty frequently in an earlier or mid-stage company as either CFO, COO. I've been a board member, and as you mentioned, currently have my own startup, Zylo Media. We're an early stage company in the digital media space.
Yep.
So have a lot of experience around angel rounds, venture funding, friends and family funding, and bank funding as well. So that's certainly not something that should necessarily be off the table. It's not always the first place people think to go, but they are a resource.
They are.
So.
They are. And let's start on the ladder here of raising money with. You've got a business person who has a great idea. They've spent time and energy putting together a detailed business plan. Now they've identified a need for several $100,000, or maybe it's $50,000. Step one, what do they need to do? So Chris, from your perspective as an attorney.
You know, I think the first thing they want to do is make sure they have their house in order.
Right.
Make sure that they've organized the business appropriately, so they get off on the right foot. And that's really, unless they're funding that business out of pocket, their own pocket. As soon as you look at somebody else's pocket, I don't care if it's mom or dad or your brother, your sister, your cousin, or the guy next door. You want to get the business organized properly. You want to make sure that you have the systems in place in order to account for what it is you're bringing in. You want to make sure you've got the appropriate entity formed. Yep. And there are several different considerations in terms of the type of entity you want to put together, whether it's a partnership, whether it's a limited liability company, whether it's a corporation. And we can talk a little bit about that because I think people are still somewhat confounded by that. Even some professionals, I think, are somewhat confounded by what's the right choice of entity. And I think once you have that sort of the whole sort of choice of entity issue behind you, and you've established whatever it is you're going to use as your vehicle for going forward, at that point it's really understanding your business plan. What are your capital needs? And then identifying what's the best source to go out and raise capital. Right. Because every business is different. And we'll talk this evening about the multiple layers of where is capital available. But you really have to look at what are the best sources to try and raise capital, and where can you most efficiently access the market. I mean, probably for the vast majority of businesses, and I don't have any statistics on this, but I got to believe it's probably 60-70% of emerging or startup businesses, probably more. That initial round of funding comes out of your own pocket and comes out of friends and family.
Right.
You've got a good idea and people are willing to put money in.
Yeah.
And that can, quite honestly, if you're an entrepreneur and you can bootstrap yourself to success without taking in any professional capital, any outside professional capital, that's the best possible route you can do. Because it's going to be your cheapest source of capital.
Excellent point.
Certainly, I think increasingly institutional investors or angels are looking for businesses to go that step. It's not enough to come to someone and say, hey, I have this idea. I might even have some IP around it, intellectual property, whether it's a patent or something really interesting. Increasingly, what we see in the marketplace is people want to see you take that idea down the track and at least prototype it or show some traction some way. Can you do a test? Can you build it out a little bit if it's code? Can you put your own money in from, tap your credit cards and get something down the road so that an investor isn't being asked to kind of bet on a hypothetical, but can you bring me something that's a little more concrete?
That's an excellent point. Sandra, from your perspective as a early stage investor.
Well, I was going to agree that they really like to see a little bit of traction having been made, and I think that building those strategic partners in partnerships with either your vendors or potential clients, customers that might be willing to say, you know, if this was built, this was the kind of thing that I can see that we would really want to use, this sort of scale, this sort of price points are pretty effective for somebody looking at what is the size of the market and how that could be met that way.
Can you talk a little bit about the Maine Angels, the process of encouraging startup businesses to look at the Angels as a source of funding, and what you're looking for? There's an application process. I think we have the Maine Angels website
Right.
On TV tonight. But
okay. Well, one of the things that I think we've been finding a little bit is sometimes people are trying to approach Maine Angels as a investment vehicle before maybe they're even ready, that they haven't thought through some of these kinds of things, that they need to think about what is their executive summary, how are they going to get to a point of figuring out the market and what the commercial pricing structure might be, and things like terms, and the fact that an investor is actually looking for an exit. They're not looking usually to be a very long-term partner. They're trying to say, if I invest my money, how soon can I get the return on that money? I think that in terms of applying, we're starting to realize that sometimes having some sort of relationship that you've built with one of the angels can be very particularly helpful, because then they get a chance to build that relationship and get to understand a little bit what you're trying to get to, and can actually share some of the expertise or experience that they might have, or some of the group. I mean, there's over 20, 30 very active angels that have either been entrepreneurs themselves or have been in certain industries that they can bring a lot of experience to the table. And I think some of them are more than willing to try and be active investors in that case.
Thank you. That's a good point. And Chris, talk a little bit about the Catalyst program at Pierce Atwood and the commitment that the firm has to working with Maine startup companies.
Yeah, we sort of recognized a number of years ago that Maine really needs people to help young businesses get started down the road. And one of the things that we thought we could do, and we've been doing it now for quite a number of years with some great successes and some horrible flops as well, which is the
Sounds
nature.
like being an angel investor.
Which is the nature of the business.
Right, that's for sure.
Well, it really is making an investment in these businesses, because what we do is we'll enter into a relationship with a young business and provide services on a structured fee basis, where we might set up a budget and we'll sit down and work with a company, and they apply to the Catalyst program. And we review their business plan and interview them, and just the way any other investor would, because we're going to be investing some level of legal services. And generally we'll set up a budget for what they need to go from where they are to some theoretical milestone.
Right.
And then we'll say, okay, that's going to cost $10,000 or $20,000 or $50,000 or $100,000, and we agree to contribute that level of service to that business. And generally there may be different arrangements where we may look for some sharing of costs up front. We may look for some sharing of costs incrementally over time, like they pay 25% of the fee and we absorb 75% of it. Or we might defer it altogether. But the theory is that because we're an early stage investor, we put it in on a basis that we generate a return when they have their first significant liquidity round, which is liquidity round is when they have their first significant fundraising event. And we generally look at the business plan and we'll say, well, there's, at this particular point, you're planning on raising, $500,000 or $1 million or several $1 million. And that's the kind of event where we should be making a decision as to whether we want to get paid back the amount we've invested plus a return, or whether we want to convert it into that round and let it ride as an investment in the business.
So you actually take an equity position then?
We convert into an equity position. Yeah, exactly. It's our option to do that.
Right.
And we've done it in some businesses. We actually, interestingly enough, I just finished last year liquidating a position in a business that we started investing in back in 2003 or so, and took the company public, and had a series of warrants and other convertible securities that we had converted. Each time they did a round of financing, we contributed services and then converted it to that equity round, and then we ended up converting out and selling the stock publicly, and it turned out to be great for them and great for us.
Right. And Bob, again, share a few trials and tribulations as an entrepreneur that is trying to move a business forward, trying to raise money from family and friends, as well as maxing out your credit card. Tell us a little bit about your perspective.
You know, anytime you can move the ball down the track without incurring personal liability, it's always a help. If you can either work with partners, get the benefit of a joint venture partner, work with a legal services firm or an accounting firm that's willing to share some of that risk with you, it really helps. Having at times personally done things like taken on a note from a bank for a piece of equipment that you have to pay that back. I mean, you can't, if you live in the community, you can't just walk away if you shut that thing down. So that hangs over you. And so every dollar you can save, you can then invest in other ways in the business. So, right. You know, it's always an interesting process. You know, as the entrepreneur, you think you have something that everybody should understand and should be ready to jump at and should be as excited as you are. And sometimes you find that's the case, and sometimes you don't. And so it really, I think it's important to try to talk to as many other entrepreneurs as you can and resources so that you know who you're going to at an appropriate time. Right. Because I think what happens oftentimes is that people might come to Maine Angels at too early a stage, yes. Or they certainly approach VCs at too early a stage. And there can be some benefit to that down the road, but oftentimes I'm not sure people fully understand that that's a process. It plays out as a movie, they say. It's not a snapshot. So you need to see and see and see. You're not going to see once and get money.
Right.
The mentoring program that you just kind of alluded to, Don Gooding, who is also a member of the Maine Angels, runs the Top Gun program, which I think is a terrific resource for enterprising businesses who want to hone their skills before they reach the point where they're asking somebody for some money to invest in their company. Don's not here, but I certainly, Sandra, can you just briefly reference that program? Because I know we refer to that a lot.
Right.
At
well,
Maine
and I
Angels.
believe that Maine Angels has actually done a very small, we sponsor a small amount to that every year. Because
Yep.
again, that's going to be a deal flow source for us of
Right.
Entrepreneurs who have been brought to the point that they are investment ready. And I think that isn't the objective necessarily of the Top Gun program. What they try and do is they take, and it's just gone statewide this year, so they have it up in Orono as well as in Portland. They try and, it's a selective application process where they take the best top 12 applicants and they work with them in a 15-week program to give them each individual from the business plan to legal to HR kinds of touch points. But the biggest part is the mentoring part of it, where they have a cadre of about 30 different mentors of people who are either experienced exited entrepreneurs. Some of them are service providers that have been doing that for quite a long time. But trying to accelerate in probably that 15-week period what would perhaps be 2 to 3 years of learning experience, and that's an ongoing process.
Yep. So we've talked friends and family, we've talked about angel investors. The next rung above that, let's assume that you've had a round of angel money and the company is ready to take the next step. Chris, do you want to talk about that?
We had several.
Yes.
Yeah, I mean, the next step up the ladder is really going to the venture capital community.
Correct.
And you know, the venture capital community is it's not a unified
right.
Group of folks, and it's actually quite stratified. And there are some venture capital, and these are professional venture capital funds. These are people that invest in businesses for a living. That is their business, and as opposed to doing it casually, or even if you do it seriously, it's not your primary business. Venture capital firms are doing this on a full-time basis, and now there are some VC firms that specialize in investing in small, regional, entrepreneurial companies. There are other venture capital firms that have certain minimum investment levels that are really targeting much more well-developed and much more sophisticated businesses. And those folks are really looking at venture capital opportunities on a national or an international basis.
Yep.
And you don't have to go far to find those. There are quite a number of them in Boston.
Yep.
And we work with a number of them. More regionally, if you're looking at northern New England, there are several groups that sort of aggregate venture capital investors and give people access to them on an aggregated basis. There's Village Ventures that we do a lot of work with Village Ventures and work with them directly and work with their investors in some of their portfolio companies.
Right.
There's the Borealis Fund.
Right.
There's Masthead,
Which has a Maine office.
which is located here in Maine. So there are a number of those kinds of venture capital groups that are smaller scale in nature, really looking at smaller businesses, maybe willing to make an investment between $500,000 and $3 million. If you go the next step up, you're looking at VC firms that really don't look at investments below $5 million.
Right.
They're looking at 5 to 10 or 5 to 15 or 5 to 20 because every investment takes the same amount of energy. And they look at it and say, well, if I'm going to spend the same amount of energy on a $500,000 investment as I would spend on a $10 million investment, then why don't I look at the $10 million investments? And as long as they can get that deal flow,
Right.
Right, the diversity
they're going to do that. And so I think that's sort of the entry point in my mind into the venture capital community, is getting connected with someone in one of the more regional VC firms, unless of course you have a business that justifies going to one of the larger, more sophisticated venture capital firms that are really looking at, it's not so much sophistication as it is size of investment.
Right.
It's kind of
Right.
scalability.
Exactly.
Can you take it to a very large size so that
But I
they
think-
can get a return on that?
What were you
that
going to say,
capital?
Sandra?
No, I was just going to say that that's where the angel
Yeah.
target range is really. We tend to be, at least at Maine Angels, more
Right.
around that 50 to 250, as much as I think one that's closing this week was as high as 600,000, but that's probably our biggest one that we've done.
We have a few more minutes left. The time has gone by very fast. There are some state resources that we have available for equity investment. Small Enterprise Growth Fund, MTI, Maine Technology, that will provide grant funds. So there
But
are.
they are just now getting into equity as well.
They are. That's interesting. And CEI Ventures is
Right.
another nonprofit that's been fairly active. We're, at a show down the road, probably next month, we're going to talk about the resources that are available out there for small business. But as we begin to wrap up the show, even the vast majority of the businesses that we work with are small to medium-sized businesses. This is a small business state. So Maine Angels investment of 50 to 250 is absolutely critical to serve that market. And at that level, Chris, as an attorney, what position or how should that business be organized? We're going to need term sheets, subscription agreements, even for the level of $250,000 or $300,000. Can you just talk a little bit about that? And
Sure.
That's an expensive process.
Yeah,
that
it is an
businesses
expensive process.
Need to deal with.
You know, I think even for investments that size, unless you're talking about friends and family, you're going to have formal documentation. So
And
generally,
don't you even recommend some sort of operating agreement with even friends and family?
Oh, absolutely.
Expectation management
absolutely.
is such a
That's
big
a
key.
good point.
that's
Sandra.
right, absolutely. But normally, friends and family will come in on a common basis.
Right.
So it's all so-called heads-up equity. So you don't have multiple classes. You don't
Right.
have any kind of a preferred security with any kind of sophisticated terms and conditions. Generally speaking, even at a Maine Angels level, certainly the VC level, you're going to see some kind of preferred equity. It's going to have a preferred position with convertibility, and that gets into a relatively sophisticated set of documents. So, for the most part, if you're going to go into the venture community, if you expect to go forward and grow your business, which is the reason you're doing this, most of the venture community looks for C corporations. They don't like pass-through entities, partnerships, LLCs, LLPs, et cetera. Now, that's not to say you can't raise capital with LLCs. We've raised a lot of capital at the LLC level. But if you're going to go into the professional investing community, generally speaking, they're looking for C corporations because they don't want to be surprised with pass-through tax attributes that upset them. They want to know that they're insulated from that. So generally speaking, it's a C corp. If you're not expecting to go to that level, then you really need to talk to somebody about what kind of entity is appropriate for your particular business, or entities, plural. If you have real estate, oftentimes that's in an LLC, whereas your operating business might be in some kind of corporate form. It does vary, but I would say if you're looking for VC capital, 9 times out of 10, you're going to want a C corp, and you're going to want to have some kind of offering disclosure. You're going to want to have a subscription, a formal subscription agreement, and then you're going to have a series of documents that establish that security.
Chris, thank you very much. That's great advice. We could go on and on for another few hours, I'm sure. But again, I want to thank you for your time tonight. We have terrific resources. Chris Howard at Pierce Atwood, Sandra Stone at Maine Angels, Bob Bruce, entrepreneur extraordinaire, struggling to get another company off the ground. Thank you, folks, and tune in next week. We really appreciate that. So,
thanks
for having us.
It's been fun. It's been fun.
It's a lot of fun.
So next month we're going to really talk about the resources, the University of Maine. We've got representatives from the University of Maine, and as you know, they're very involved in technology transfer, and we've got other. We'll have other guests as well. Nat Henshaw from CEI and others. So
great.
So anyway,
that's good. Good to have him.
From your perspective, you're all from out of state originally. I know you've lived here most of your life. You've developed your careers here.
I'm not admitting I'm from out of state.
No. Okay. How would you, as a place to do business, from your perspective? Thumbs up, thumbs down, from your perspective as a place to.
Well, you have to. As a place?
As a place to do
Maine's
business.
a fabulous place to do business.
Yeah.
From an economic point of view, in terms of access to capital and economic climate and tax structure, a lot less so.
Yeah. Sandra? You're from Chicago. You're here.
From an entrepreneur standpoint, I think that one of the things is Maine is a small state, so that it's easy to make some of those connections. I also think they have to be very careful about making sure they don't disconnect from something, because it can come back and be hurtful. From an investor standpoint, you can make a lot of those connections and strategic partnerships much more easily than if you're in Boston, and it's much more competitive down there, I think.
I think they're giving me the sign off. We're done. And Bob, thank you.
Thanks.
Thank you.
That was nice.